$10 million. That is where the public account is headed. This portfolio right now is a little under $2.5 million. We're going to speak in this video how I'm going to get this portfolio to $10 million plus, how long it's going to take. This video is going to be educational. I'm going to teach you how to scale a portfolio in this video here today, which obviously this portfolio we scaled to $1,000, $10,000, $100,000, $1 million, now multi-million, right? And so next milestone for this portfolio is going to be 10 million. So it's going to be a very educational video here today. Also going to be a little bit motivational, which I'll be completely honest with you guys, I feel like people need a little bit of motivation out there nowadays. I think my opinion is, and kind of what I see out there, a lot of people are lacking motivation for a few core reasons. We went from Rona, the shutdowns, into very high inflation, now into an election cycle, and I think it has a lot of people feeling not very motivated out there, right? Which is the worst possible situation for you in your financial future and your family's future and all those sorts of things, right? You need people to be motivated in order to go out there and make it happen. And, I can tell you, this world was built on the back of people that were very motivated. None of this stuff would exist we have today without people that were very, very motivated to get there, right? So this video should be a little motivational for you, but it's definitely going to be heavier on the education side. Now, when you're scaling to your portfolio to 4 figures, it's really all about income. It's not about how your investments do. It's about just having more income than expenses, being able to funnel that money in to build your portfolio. Scaling to 5 figures, same exact thing. That's really heavy on just income expenses, funneling money into your portfolio. It's not about how your investments are doing. Now, where it starts to matter is when you're trying to scale to 6 figures in the market. When you're talking about scaling to 6 figures, now your income's still very important, having more income than expenses, but your investments really start to matter when you're scaling from 5 figures to 6 figures. Now, when you're scaling from 6 figures to 7 figures, this is where your investments start to become more important than your income. So your income's still important, but it's not as important. Now, when we're talking scaling 7 figures to 8 figures, your income really doesn't matter at this point in time. It's really about your investments, okay? And so that's something very, very important to kind of keep in mind here, right? And just think about it like this. Like, let's say you have $1,000 a month to deposit in your portfolio, or even $2,000 a month to deposit in your portfolio. That matters a lot at these stages, right? But as you run the numbers up, like, it just starts to matter less and less and less. So I think that's important. Everybody kind of understands that. So let's go ahead. Let's run through this. Hope you guys get a lot of value out of today's video. It's a very educational one, and hopefully a little motivating for you guys. Appreciate you being here. Thank you for being subscribed to the channel. New all-time high subscribers in the history of the channel. Okay. So public account. Started this portfolio that was around, I believe it was around 7 years ago, roughly now at this point in time, right? So obviously the portfolio has grown immensely over the years, $2.4 million plus in this portfolio. Now, it's very clear what really matters in the portfolio, what really drives a portfolio. It's really the top 5 positions or so. And the reason being, these ones just have so much money invested into them that if these stocks go up considerably, it's going to push the whole portfolio. If they go down considerably, it's going to push the whole portfolio down. And the way I'll put it to you kind of like this, right? Let's say Fubo is a 10x opportunity. Let's say that stock, over the next few years, 10x's, and it's a beautiful speculative stock that just came through and it was amazing, right? Even if that stock 10x'd, I'm only going to have $210,000 in it. So that's not changing the game for me in terms of getting me to a place where, the portfolio is $10 million. It's like, that would be great to 10x my money on that stock, but, that's not actually changing the game. These top positions are really the ones that really change the game. Now, next thing you got to keep in mind when it comes to scaling a portfolio, and this is the way I'm thinking about the public count, is patience. Patience, get it? Listen, in 2021, for instance, let's go back in time, 2021, there was a lot of us that were in a very rush to scale to the next number and the next number and the next number. And I think a great lesson 2021 into 2022 taught us all is that you can't be in such a rush. This portfolio is almost 2.5 mil. I'm not in a rush to get this to $10 million. It's going to get to $10 million, but it doesn't have to happen tomorrow. It doesn't have to happen next year. At the end of the day, patience matters significantly, right? And I'll put it to you like this. Let's say I wanted to run a 5-minute mile, right? And let's say currently I run a 7-minute mile. That's like my max right now. So let's say I'm like, I got to get down to this 5-minute mile, and I want to get there like in a week, right? Okay. So I want to run a 5-minute mile by next week. So I go out there and I run 100 miles over this next week, right? And it completely destroyed my body. I destroyed my feet. I got plantar fasciitis in my feet, and my Achilles tendons completely destroyed, and I don't know, I tore up my knee, and everything on my body's wrecked. So now I can't even run for like at least 1 to 2 months. So now I set myself further behind the ball, and I'm probably going to be in even worse shape when I can finally run again than where I was previously, because I went way too crazy with it way too fast. The same thing can happen with your portfolio. If you are so in a rush to get to that next number, that next milestone, we're going, baby, you're going to likely end up in the situation where you're going to probably hurt yourself pretty bad, and then you're going to set yourself further behind, and then you're going to have to play catch up to where you used to be. It's not fun. I've been there twice in my life, twice in my 16 years of investing. It's no fun to be there, where you set yourself behind because you took too much risk, and then you have to play catch up to get back to where you used to be. It's no fun, guys, okay? So let that example I gave you there, just always remember that in regards to your portfolio. Now, with about $2.45 million in this portfolio right now, depositing around $2,000 a month, because I deposit $500 every week into that portfolio, and I invest that money, right? Everybody in the private stock group gets to see those moves each week. So let's say I do that for 10 years, and let's say I get an S&P 500 rate of return, which is 8%, right? Which is certainly not good. That's just keeping up, with the historical average. Even the S&P 500 actually has been outdoing 8% per year here recently. But let's just use that as a number. Where are we at? We're at $5.6 million. So over the course of 10 years at a market return that you kind of expect, we're not getting there, right? So I need to definitely amp it up a little bit if we're going to get to where we want to get to, right? If I had to do the number I have right now, right, $2,000 a month, 18 years at an 8% return, that gets me to my $10 million plus, okay? So the moral of the story is it's basically going to take me 18 years if I just get a market rate of return, which is 8% on average for the S&P 500, to get to $10 million plus in the public account, right? Which isn't bad. Like 18 years, I'm about to turn 35 here soon. So yeah, that puts me at 53 years old, and the public counts $10 million plus, right? Remember, we're just talking about the public count. We're not talking about all my other portfolios and real estate and all my net worth and all those sorts of things. So 18 years is roughly how long it takes, but I don't get market returns. The public account, according to Fidelity Investments, has gotten 25% here per year. I went a little more in depth here. Cumulative 5-year return for the public account is 219%, so about a double up of the S&P 500. I went more in depth here and look at the annualized returns that Fidelity calculates. On a time-weighted return, they have us at 25%. On a money-weighted rate of return, they have us at 21% per year, okay? So let's go ahead and let's run some numbers and kind of see where we could be at here roughly. So once again, $2.45 million, $2,000 a month in contributions. Over 6.5 years at a 25% rate of return, I will get to the $10 million. So we can call it when I'm like 42 years old roughly, right? Or maybe 41 years old. We would essentially get there if I can get that rate of return, the 25% that Fidelity has us at, right? Now, let's say I get the 21%, which is what Fidelity calculates the public count at for money-weighted rate of return, right? So if we're going to go ahead and do that, that would take about 7.5 years at a 21% rate of return, and we would be at about $10.5 million there roughly. So assuming I get the returns I've been getting, right, I should be there within a decade. Let's call it that. Within a decade, I should likely be there, which is awesome, right? So less than 10 years it should happen, but keep in mind I could do 20% plus a year in the public account over the next 5 years, like the past 5 years. And I think that's a fair question. Like, can I do it, right? Here's why I could do it again, another 20% plus a year, right? One is the chances I have another chef type loss, which remember in these numbers calculated here, that's the chef loss in there from the public account. I had hundreds and hundreds and hundreds of thousands of dollars invested in the chef in the public account. It was a huge, massive, epic loss for me, right? I don't think I'm going to have another chef. Let's just put it that way. It's not very probable. I lost several $100,000 in that stock just in the public account alone, right? So I think that the probability of that is very, very low because I learned my lesson. Let's just call it that. And it was a very expensive lesson, but I learned my lesson in regards to that. Number two, I would say I'm definitely better and more focused now. I got slapped in the face so hard in that whole situation that I've never been this focused and just on this wavelength as far as my game goes when it comes to really picking stocks. This is like another level up I feel like I've taken. Number three, I can be honest with you guys, investors are lazier than ever. They're just an index fund bunch at this point in time. They're like a bunch of athletes who never work out, and as long as you're the athlete that does work out, you're going to pass up everybody. This is the laziest bunch of investors we've ever seen, right? These folks are not putting in any time. And when I'm talking about folks, I'm not just talking about retail. Actually, retail might be the best they've ever been in terms of their education and their abilities. But when I'm talking about like even big fund managers. I'm telling you, these big fund managers are not putting in the work anymore. These folks are so lazy. They're just, if they're playing a game of let's try to keep up with the S&P 500. Oh, the S&P 500 is beating us. Let's go buy nvidia and Tesla. We're beating the market. Okay, let's just watch risk on that side. They're so lazy nowadays. A lot of these guys aren't even doing fundamental research into small caps, into mid caps, and I can see it in the valuations of certain companies. I'm like, no one's even doing work here, right? And then eventually they come around to these stories and they're like, oh my gosh, like this was this big thing. Like, why didn't we buy this 3 years ago, 5 years ago, 10 years ago? But remember, a lot of these guys, it's not for them, the fund managers, it's not about getting the best return. It's about keeping their clients around. So their time might be better spent on the golf course with a high net worth individual than actually in the office doing the study. That's an important thing to understand, okay? So their time might be more well spent going to parties with high net worth individuals than to actually be spending that time, let's call it, doing the actual research work. Next part up here is when you understand kind of my investing philosophy, it's growth value dividends, it's GVD. Value and dividend stocks could perform great the next 3 to 5 years. We're setting up for a rate cut cycle, which likely is going to mean money's going to pour into kind of value and dividend related stocks, right? That should be very good for those portions of my portfolio. And a lot of the stocks I've been buying here recently are more of those value and dividend stocks. So I should likely make the dividend money from those stocks. Additionally, I should get nice share appreciation in a lot of those companies. Number 5, think about this for a moment. In the past 5 years, right? Even though I've gotten those insane returns, we've had the highest rates in decades, the highest interest rates in decades. We had the highest unemployment in decades, right? During Rona, unemployment went to like 15% or so. That's the highest we've seen in a long time, many decades, right? And in the past 5 years, we had 2 stock market crashes, not 1, 2 in 5 years. We had obviously the 2020 stock market crash, which was the fastest, like 35% drop in the S&P we really have ever seen. And then we also had the 2022 stock market crash, which was pretty vicious, specifically for tech stocks. NASDAQ peaked to trough, and that one fell like 37% plus. That was nasty. So we had 2 stock market crashes in 5 years. Do we get another one? Maybe it's a potential, or maybe we don't have another stock market crash in the next 5 years, right? No, by the way, and that's good and that's bad. One is if you're buying stocks in the crash, like I was in 2020 and in 2022, you're getting stocks at really attractive prices, which is good. But the bad thing about that is it's very painful to go through when you're actually going through that stock market crash, right? And the 6th reason I think I could potentially still get another great returns like I've gotten over the past 5 years is 1000xstocks.com. It's helping me out so much. Like things that used to take so long, like, there's a finite amount of stocks that my money's going to go into. And so whenever I wanted to compare companies versus each other back in the day, it used to take so long. When I wanted to run my valuation models, I used to pull up my numbers sheets on my MacBook here and used to run all my numbers, right? And it was very similar to like if you had Microsoft Excel. It took forever. And now I can do that in a matter of seconds through 1000xstocks.com. I can compare companies, all the different metrics in seconds. Something like that used to take me 30 minutes, an hour. So now I can be a much more well-informed investor and just on a better wavelength than I've ever been. And so that tool's like the most valuable tool for certainly I've ever built. Like it's unbelievable. And so that's why I could do it. Now let's go on the other side. Let's play devil's advocate. Let's say why I might not get those sorts of returns over the next 5 years in the public count. What if I have no 10x, right? I had actually like 2 10x's, right? Elf on a Shelf and Tesla. And so there is a potential over the next 5 years I don't have a 10x, right? And if I don't, it's going to hurt my returns. Food for thought in regards to that. Of course, you can say, I also shouldn't have a chef, which is going to be very good for my returns as well. So that's something to keep in mind. Second thing is 1 to 2 years. 1 to 2 years of the next 5, I think, will be down for the stock market. I'm pretty confident in that. I don't think all next 5 years are going to be great. I think we're going to have 1 to 2 down years in the stock market in the next 5 years. Number 3, since I'm more risk adverse, I might miss an Alpha. I might miss a Tesla because I am more risk adverse nowadays because of the chef situation, right? And how bad that slapped me. I'm much more risk adverse nowadays. I'm looking for only great balance sheet companies. I'm looking for, if you look at all the stocks I'm heavily invested in, very profitable companies, margins are going up, revenues going up, earnings per share is going up, all those sorts of things. I might miss that 10x opportunity. I don't know. We'll see. But since I'm more risk adverse, it's a potential I could miss it, right? Fourth thing is money could focus on real estate the next 3 to 4 years rather than stocks, like prior to the great financial crisis. So this is a risk I don't think probably anybody's factored in other than me. Like, what if we're in a 2003-ish time frame right now, right? And what if we're about to go through, like, people think we have a real estate bubble. What if we're about to go through the real estate bubble? What if it really hasn't hit yet? And you see over the next 2-3 years, massive amounts of people go out there and buy homes now that rates are dropping, right? And then there starts to be this exciting cycle where prices start going up because people are bidding up the homes. And you get into some sort of, super cycle in regards to real estate. I don't know, that's just a potential. I'm not banking on that, but it is a potential. And if that happens, people are going to put money into real estate rather than stocks because they're going to say, oh my gosh, these homes are going up so much in value. Real estate, right? And especially if we don't go through a major crash over the next year, I think that will give people even more confidence because they'll look back and they'll say, look at how high rates went, look at how high mortgage rates went, and real estate still didn't crash. That means no crashes for real estate. And so all of a sudden they start to funnel money into real estate. That's part of the reason we had the great financial crisis. And everybody's talking and they're like, oh, I just made this much. I just bought this house and I can already flip it for a $30,000 profit. What if that happens? Then you're going to see a lot of money flow into real estate. That will end up being actually destroyed. But a lot of money would flow into real estate. And people would say, why do I need the stock market? I'm putting my money in real estate, right? So that's something to kind of factor in there. It's a potential, right? Number 5 here is if inflation 2.0, if that hits in the next 24 months, I think things could get ugly, really ugly. We can't have another inflationary cycle. When I say inflationary cycle, I'm talking about like 4% plus CPI. We can't have that for, I would say, at least 2 years. The consumer's in way too weak of a spot now to be able to handle another wave of major inflation. So if we had another wave of major inflation, I can tell you it would be devastating. Absolutely, positively devastating to the economy, to the consumer out there. So we really need inflation to stay in a lower place for the next 1 to 2 years. If that happens, we're looking good. But I can tell you, if all of a sudden a year from now inflation starts going crazy again, we're not going to be able to take that one. We'll see a massive unemployment cycle in that situation. So that's why maybe the returns won't be as good in the next 5 years, right? Now, main thing I need to do is avoid a big mistake. I need to avoid a big mistake because when you make those big mistakes, you have to play catch up and it takes a while to get back to where you used to be. So it's very important I avoid a big mistake, right? So let's say, for instance, if I was in a rush to really try to hit these numbers as fast as possible, I might move money out of a Meta and move that into, let's say, a SoFi. So SoFi all of a sudden would become $1 million position. So is SoFi a 10x opportunity stock? Sure. Could it go from 7 to 70? Over the next 5-10 years? Yeah, it's a possibility. But it's also a financial, it's also a bank. What happens if they give a bunch of bad loans, those loans aren't paid, we have some sort of major recession? Banks go bankrupt. And so could SoFi go bankrupt? I mean, I don't think it's super probable, but it is a possibility. So that's why I wouldn't put all that money in there, because I can tell you if for some reason I was wrong and that company went bankrupt or something, it'd be devastating the public account. And now it would take us likely years to get back to where we used to be. Right? So this is why I talk about it's not just about how much money I'm going to be making, the reward potentials in regards to stock, but it's also about the level of risk. Very, very important to keep that in mind. Next up here is the dividends. So dividends, Cheesecake Factory just paid me this dividend in the public account, $361 here in the past month, right? I invest that money right away. I got to invest that money right away into stocks. Meta, they're going to pay me out another dividend. Congrats to any Meta shareholders out there. You got more dividend money coming to your portfolio very soon. Meta should pay me out based upon how many shares I have in the public account. They should pay me out, I believe it's $850 in 2 days from now. So that money hits, got to invest that money right away. And this dividend money, as a portfolio grows, it's like a snowball going down a mountain, and it just keeps getting bigger and bigger and bigger and bigger. And it's really beautiful because you got to keep in mind, the bigger your portfolio gets, the more money you're going to have invested into these dividend stocks, right? If you invest like me and you have GVD, growth value dividends. Additionally, if you own great companies that their earnings per share keeps going up, they're likely going to keep raising that dividend year after year after year. So something like a Meta, right? Don't be surprised if Meta, let's say at this time next year, is paying a dividend of 60 cents a share or 75 cents a share. Like, that's a realistic potential. So the dividend money I'll make next year is probably going to be even bigger than it was this year. The year after, the dividend money is likely going to be even bigger. The year after, even bigger. The year after, even bigger. So the snowball gets bigger and bigger and bigger with the dividends, and that's the beautiful thing about this, right? I have a saying. My saying goes like this in regards to dividends. Dividends are forgotten until the market goes south or the money hits your portfolio, the money hits your account. Then all of a sudden you start to pay attention to dividends again, right? And it's very easy to just forget about them, not pay attention to them. Dividends, it's just little money. It's just little money. Little money starts to add up, man. Especially when it's invested and you start talking about compounding and the portfolio gets bigger and bigger and bigger. There's going to be a day in the public account when I'm making tens of thousands of dollars a year in just dividend money. We're not talking about taking gains out. We're not talking about taking profits. We're talking about just dividends. I'll be making tens of thousands of dollars a year. And it's not in that far of a future. That's probably in the next 5 years, 7 years, I would say. I'll be making tens of thousands of dollars of dividend money every year. Now, think about that 20 years from now. That tens of thousands of dollars is probably going to be hundreds of thousands of dollars I'll be making in dividend money each year, right? It becomes very, very powerful. It's a snowball. Like Warren Buffett always says, it's a snowball, right? So keep that in mind. Don't bypass those dividends, right? Now, I always say, like, everybody in high school or college should be playing sports. And the reason being is when you play sports, you learn that it takes a lot of time to get good at something. It takes a lot of work. It takes a lot of effort, right? And building a portfolio is very similar to being good at a sport. There's no shortcuts. It takes time, and it takes a lot of work, and it takes a lot of effort for you to get to those sorts of levels, right? 2.4 million plus in the public account. It's taken a lot of time and it's taken a lot of effort to get there. I started that portfolio like 7 years ago or so. So a lot of time to get here and a lot of effort, I can tell you, a lot of research study. When I was in track and I was doing track in college, I understood very early on, sacrifice is not optional. You need to sacrifice. And what that meant for track was pushing your body to the limit where you feel dead. Like the amount of times I did practice and I felt like I was going to die. It was on a very regular basis. On a very regular basis, you throw up. It's vicious, but I had to push my body through it. And then I would get done practice, and even though I didn't feel like it, I would go do stadiums. I would go to the gym after, do a full workout, right? Squats and lunges and all these different workouts. Sacrifice is not optional. And I learned that, right? And at the end of the day, I made the biggest improvement from like where I started my freshman year versus where I was the next year. I made the biggest improvement by far and away on the team, but I also was the hardest worker on the team, right? I certainly wasn't the most talented. I was actually the least talented. When I first joined that team, I was by far and away the slowest, and it wasn't even close. But I made night and day more progress than everybody else, but I was willing to outwork them during practice, and then after practice, they called it a day. I kept putting in the grind, right? And when you're 19, 20 years old, you can put in that grind on your body. Is not going to be the end of the day, right? So sacrifice is not optional. I learned that doing track. It's the same thing in regards to stock market investing. I learned that at Quick Trip, right? I was able to make more money than anybody else at my positions when I was at Quick Trip. I was able to move markets. I was able to get promoted up the ranks, but I made a lot of sacrifices that other people weren't willing to make. I'd pick up extra shifts, get extra overtime hours. I would, every day, even if I was sleepy or whatever, put in my best effort. I would always try to make sure all the employees were happy and the customers were happy and everything was perfect. And I could have probably kicked back a lot more, but at the end of the day, there's only going to be one number one, right? And so it was a lot of sacrifice. It was a lot of grind. It was a lot of overnights when I first started. And I was willing to put in that sacrifice, and that's why I was able to get to $200,000 before it was 24. Between that and investing, it was game over. YouTube. This is a main channel, right? Made $1.8 million from this channel over the past many years. That's like $1.2 million after taxes for those of you keeping track at home. I can tell you, there was a lot of grind back here, a lot of grind. I wasn't making crap for money. I was doing my real estate marketing company. I'd take pictures, do videos of homes. Then there'd be some news breaking in the market, some earnings I want to cover, whatever. And I'm like, I got to go home, got to make a video. And I'd go home, make a video, then be working crazy hours. And that's what it was, right? And for very little payoff. And I mean extremely little payoff. But man, did it pay off over time, right? But it was a lot of sacrifice. And I can tell you, most people would not be in that sacrifice. They're like, oh, I'm doing my real estate marketing business. That's good enough. I'm calling it a day, right? And I was just willing to put in that grind and put in that effort to get where I needed to get there, right? And I still made time for everything else. That's the thing. It's not like I neglected all my relationships or anything like that. I still made time for family, still made time for all that. A lot of times people just aren't very time efficient. So they make these excuses of oh, it's going to cut into this time or that time. It's because they're not time efficient at all, right? So that's just something to kind of keep in mind there. And maybe that's something I learned in college. When I was in college, for instance, listen, I worked 3 part-time jobs at one point. I took all my full credit hours and I was running track. So I learned, even in college, you better manage your time very well. And even despite 3 part-time jobs, doing all my credit hours as far as college went, and in terms of running track, even with that, I still had time to talk to the ladies and do all that other stuff you do in college, okay? Still had time. This is about managing your time efficiently. A lot of people are just crap at managing their time. I think one of the best features Apple has is you can see, or I'm sure other smartphone makers, you can see it as well. You can see exactly how much time you're spending on your phone, your devices, right? And is that time going to something that's worthwhile? Is it educational? Is it going to help you make more money? Or is it something that's just like a time suck, right? That's something you got to keep in mind there, right? And even in all my days of working at Quick Trip, I still had time to spend a ton of time on the market, still had time to waste time, right? And have a social life and, watch football games and all that stuff. But it's about managing your time correctly. That's the thing. Not a lot of people know how to manage their time. They're horrible at that, right? They're just not good. And then if I bet you I look at their phone, they spend 2 hours plus on TikTok. They spend 3 hours watching Netflix. And then they're like, oh, I got no time for anything, right? They spend, an hour looking at chicks on Instagram. Oh, I got no time, man, I swear. Okay, gosh, okay, right? And you think about all the sacrifice I spent on all this stuff over time, right? Listen to earnings calls. I've probably listened to, I wish there was some sort of recorder that could keep track of all the times I listened to conference calls in my life. It's easily in the many thousands. It's just a question of have I listened to 10,000 conference calls or not? That's really my only question at this point in time, right? The amount of SEC filings I read through over time, the valuation models I put together, oh my gosh, it's a lot of hours, right? It's scary hours. So what do I have to show for it all? Well, $4.5 million in real estate, many millions in stocks. We know the public count's around 2.5 million, and then I got my other portfolios as well, so it's always a secret on how much I actually have, but it's a lot, right? I got a Model X, got a Model S Plaid. I got all the tech I could ever want. I got the newest PlayStations and Oculuses, and I just ordered the new iPhone. I got all that stuff, right? I wake up whenever I want. I work when I want. I vacation when and where I want. Doesn't matter where. I can go anywhere in the world. I can stay anywhere. When I went to New York City, stayed at the Plaza for multiple nights, and it wasn't even all that. $1,500 a night? No. I wouldn't pay for that again. I've been much better placed than the Plaza. Let me put it that way. I can retire when I want. I don't have to do this. I can do whatever I want. I have so much money, it doesn't matter, right? I can retire when I want. I can give to charity and causes every year. Every year I give to charity and causes. I'm like, this is good for this year. This is good for this year. If I see something I can, and it's not like, oh my gosh, this is going to break the bank or something like that, right? And live life on my own terms. And this is the goal. This to me is the goal, is really living life on your own terms, because I can tell you not a lot of people do that. But they don't do that because they don't know how to manage their time efficiently, and they're not willing to put in a sacrifice, which is a lot of sacrifice, right? To get to this level, the amount of sacrifice, or whatever you want to call it, of work, it's a lot of work, right? Not everybody wanted to go through all those accounting levels I went through in college. Not everybody wanted to deal with all the BS you got to deal with on YouTube. There's a lot of BS you got to deal with in the politics and oh my gosh, there's a lot of crap you got to deal with on YouTube. Not a lot of people want to do that. Not a lot of people want to work multiple jobs. Not a lot of people want to work overnights. Not a lot of people want to do whatever's necessary to get it done. But it's one life. It's one life. And so, you can choose to do whatever you want and live your life how you want to live. But I'm just saying, there's another outcome here. It involves a lot of work, a lot of sacrifice, and a lot of time management, a lot of effort. But dang, it pays off pretty handsomely, right? And the great news for me is I don't wake up every day complaining about this and that. I can tell you a lot of these people, I say the majority of these people that don't put in the sacrifice and the effort, they wake up complaining every day about how the world's wrong. Oh my gosh, the world's so bad. Oh, this is so bad. This is so bad. Oh, I can never do anything. Oh, I can never do anything in my life. I'll never be rich. I'm never going to have money. Oh my gosh. Oh, and it's because of this, and it's because this politician, and it's because this politician, and it's because of the way my mom raised me, and it's because of my dad, and it's because of my brother, my cousin, my sister, my aunt, my uncle, my grandpa, oh, and just go on and on and on. We could all make up a million excuses, and my neighbor did it, dude, someday you got to wake up and you got to take life in your own hands. Come on, man. And so keep that in mind. It's a lot of work, but it's a better outcome. That's what I'll say about that. It's a heck of a better outcome than being miserable every day and waking up and being like, the world's all wrong and everybody's all wrong and this is all wrong and feeling like you're victim to everything in the world. Oh my gosh, it's no way to live. It's no way to live. And I can tell you a lot of people, and I mean a lot of people live like that every day. And they work at some job they don't really want to work at because they got to keep food on the table. But at the end of the day, they don't do anything extra to get ahead. They don't put in any effort. They don't worry about income and expenses. And it's just I don't know. You can choose whatever life you want to live. I'm just saying there's different outcomes here. And some days folks got to open up their eyes and see, oh my gosh, there's really other potentials out here, right? So that's something to kind of keep in mind there. So this is when I'm talking about scaling a portfolio up. And keep in mind, this video is going to help you out immensely. If you didn't get to see this one I released 3 weeks ago, oh, is that a banger? 52 minutes. This is definitely my best video I've put out in, certainly I would say, the past year. Such an important video. My favorite video I put out in the past year. That one you're going to get a ton of knowledge from. And it's going to teach you more of the nitty-gritty type stuff around investing, running portfolios and things like that. But this is how we'll get to $10 million plus in the public account. And whether it happens in the next 5 years or the next 10 years or the next 15 years, I'm okay. I'm okay with that, right? The moral of the story is we'll get there. And it's a process. It's a process to go through. It doesn't happen overnight. You got to stay patient with it. You got to put in a lot of work, a lot of effort, and it'll all work itself out in time, right? Rome wasn't built in a day. This YouTube channel wasn't built in a day. The public account wasn't built in a day. It took years. It took years of building that public account. It took years of me being on YouTube to be the success. It took years in regards to the stock market to really get where I felt like I really knew what I was doing in this market, knew how to identify opportunities, trends, all those different things. It takes time, right? But you got to stay with it. You got to stay patient. And, the payoff is pretty good. All right, guys, appreciate you joining me as always. If you're looking to take your knowledge up to much higher levels, you can apply to join my private stock group, private wealth group. That will be the pinned comment down there. You also get full access to 1000xstocks.com. That will be pinned comment. You get access to our Discord community, all that good stuff. But mainly you get the main course, I can call it, is all those course curriculums that'll teach you everything I know up here. All righty, much love and have a great day.